too. Oh, I dropped the volume way too fast. It's gotta sound nice. It's gotta sound. That did not sound nice. I digress. Ladies and gentlemen, welcome. My name is Trav. We've got Kobe. We've got Quantic. Together we are at Web3 Matters. And today, I don't know. I'm pretty freaking fired up as per usual, Steve, to have you guys with us today from Flare Forward. Let's just pass the mic around, check in with everyone, get a quick temperature check, and then we'll introduce our topic here today. So, Quantic, why don't you get the ball rolling?
Yes, sir. Today I'm super excited about the topic that we're going to be discussing. I know that a lot of people have been asking about what happens next with the flare drops and, blah, blah, blah. So we have the experts here. We have Steven and we have Will, who is joining right now. They have been working on this incredible application, the DeFi Tracker, that essentially simplifies your DeFi journey on Flare. And they started as bike coders. Actually, we're connected to this story directly, so it's an amazing opportunity to highlight their work, but also to talk about the meats and potato, which is exactly how to utilize your FLR on DeFi on Flare.
Excellent. I mean, you had me at meat and then once again at potatoes here, and then finally
Ooh.
at winning in DeFi on Flare. And if anyone doesn't know, Flare is like one of the most slept opportunities in crypto and DeFi right now, in my opinion. Here, I'm not going to get too far into it because I'm definitely not the pro to be able to speak to it and eloquently, communicate how sweet it truly is. But we'll get there. So Kobe, why don't you get us going here?
Yeah, man. Well, the same. I'm also pretty stoked to talk about Flair, and I probably have a different reason why I think Flair stepped slept on than you, and so I'm excited to kind of maybe compare those two different reasons later. And yeah, as always, these guys from Flair Forward, Steven, Whale, they've got Ace as well, which I don't know if he'll be joining, but these guys have joined us a few times, and um, like Quantic said, we've got a little bit of a history together. At least, we are supporting cast in their story. So couldn't be more excited to chat with these guys. Not only are they like dope builders and really good work ethic, but they're like down to earth people. I've worked with a few different dev teams throughout my time in Web3, and just like the real world, there's all types of personality styles, and these guys are definitely the ones that you want on your side. So definitely stoked to have them as well. So I'll kick it back to you, Trav.
100%, 100%. And if you guys, I'm sure for any of our usual Web3 Matters followers here, you guys have seen these guys up on our stage a couple of times here. And every single time we've had conversations with you guys on our live streams, it's been action packed and like just full of actionable, tangible alpha. And then just to really hammer that point home, to just put all my cards out on the table, I just want to let everyone know that for the DeFi positions that we're going to be looking at today, I plan on actually using my own liquidity to put into that, and then we'll follow that up over the next couple of weeks and kind of monitor the progress with that here. So that's how much trust and faith I have in Flair and in these legends here guiding us here today. Obviously, no financial advice, but I'm really excited for this one here today. Here, so yeah, we've got Steven. You were the first one here with us today, so I'd love to just send the mic over to you. Why don't you introduce yourself and let us know what you're all about?
Yeah, guys. I mean, thanks for having us back on. Always love chatting with you guys. It's always a blast. I mean, Flair's been something we've been super heavily in since, man, I don't know, 2, 3 years now. And then Whale and I have been really working together now. I think a little over a year and a little year and some change. So it's been a really fun journey for us as a group. And then we brought Ace on. He's actually been with us about a year too. So yeah, no, we're just a bunch of guys who love Flare. Looking forward to actually helping see what utility looks like, not just DeFi, but also how do we help bring utility in a valuable way? Because again, we are heavily invested. We think Flare is incredible. I mean, it's an incredible tool, and so that yeah, just super excited to be with you guys and been just an incredible journey.
Love it, love it. And once again, a little teaser just to keep you guys on the edge of your seat here. We're going to be getting exactly into why Flare is such a big deal here. And as soon as you hear, it's like literally one sentence that you guys need to know. As soon as you hear, you're going to be intrigued. I promise you that here. Whale, thank you so much for joining us, my friend. Apologies for the miscommunication about timing here today, but thrilled that you're able to be with us as per usual. How are you doing today, my friend?
Hey guys, I'm driving back home. I really thought that this was an hour later, so I won't be able to share my screen, but we got Steve and he's got that covered. And I'm really looking forward to this conversation. One thing that I want to talk, and I think Quantic will be able to expand on this. I feel like a lot of people understand that DeFi it's the main mission on Flare, and I think that DeFi is the economic layer that makes Flare be successful. But the real business model is verified data. So I have some great updates that I want to share of what we're doing on the tracker, and yeah, looking forward to this conversation. It's going to be a fun one.
Right. And just to kind of, first of all, my dude, thank you so much for being here with us today, once again here. And just to really emphasize that, when it comes to DeFi, we're talking about like the finance layer here of crypto. The what tracking is so incredibly important. You guys are going to get a really good sense of why that is here. But you really need to like if you really want to win in like concentrated liquidity, for example, even just different types of liquidity provisions strategies, you have to be able to keep track not only of your positions, like precisely how they're doing, but other potential opportunities that may arise just here and there. You need to be up to date if you really want to maximize this opportunity here. So really excited to get into that here. So before we get into the actual meat and potatoes, once again, Quantic, as you said so eloquently, or wait, was that you or Kobe? I'm still waking up here. Quantic, why
No,
don't
it
you
was Quantic. I know I look like I eat a lot of meat and potatoes, but don't get it twisted.
don't get it twisted here? Well, let me just say you wear it proudly, my friend. I couldn't be more happy. Quantic, why don't you give us a quick overview of why Flare is so bullish? I know, and then yeah, just any exciting updates you want to let us know.
Yeah, absolutely. So first of all, like the usual disclaimer, none of this is financial advice. I work at Flare. The reason I think Flare has so much potential is because the way they are approaching product market fit. So any blockchain that is going to survive, it will need network effects. It will need entrepreneurs making money. And I think that actually Stephen and Whale are excellent, example of that. But it needs to have a unique angle on things that people actually use. So when it comes to that, the number one thing that crypto has done in terms of product market fit is DeFi. Now, there is a big problem for some assets such as BTC or XRP that do not have native smart contracts because they cannot do the DeFi that we all like in EVM, right? Like if you talk about DeFi, the first thing that you have to look at is the history and trajectory of Ethereum, which is arguably the, financial backbone for on-chain finance, right? And then it comes Flare that has, first of all, it has enshrined oracles, meaning that the pieces of software that connect you with the external world are secured by the stake of the network. This is a unique thing that you don't find anything in any other place. And that gives you guarantees about the operations of your data that are crucial. Think about 1010 last year. Think about what happens with oracles. Think about the number of times that we have seen massive liquidations, people losing a lot of money just because of an error with oracles. Well, what is happening with those oracles? I want to ask you. I'm talking about the people that are watching this right now. Think about that. I'm not gonna, talk bad about the competition. I don't think that makes sense. But this is not something that is gonna happen to you on Flare. So that's one thing. Then, on top of that, you can build interesting solutions. The main solution here is called F Asset, which is this over collateralized bridge that can help these assets that are idle, such as BTC or an XRP, to become actively used on DeFi, right? Right now, we're starting with XRP, and you have seen massive movements from retail so far, not that much from institutions yet, that
Yes.
are utilizing these to actually make more money, right? And putting their assets to work, which is the entire point of why you would want to hold an asset that you think is going to appreciate. You don't want to sell that, but you can put it to work and make some extra bucks, right? And today we're going to explore how you can utilize the application that Steven and Will are building such that you can do that on your own on Flare and hopefully explore XRPFi, which is the name that we have given to this movement of bringing XRP to DeFi.
I love that. And just, First of all, Quantic, thank you so much for mentioning all that stuff, my friend. The big piece of alpha I wanted to mention is that it's actually giving XRP utility. Like it's actually allowing holders of XRP to use it instead of just holding it and hoping it grows over time. Um, and I lost my train of thought. Look at that. Steven, why don't you let us know what you got here pulled up? And meanwhile, I will try to get my train of thought back and finish that off here. It was something awesome, but
Yeah, so
we'll get
I've
there.
got
We'll get
what
there.
I pulled up is the DeFi Tracker Pro automation tool that we built. Again, we have two DeFi Tracker Pro tools, and they can be both accessed through the same site. One is kind of a manual input, so this way it's versatile for all networks, all liquidity pools, all dexes. You can add tokens, super versatile. But the downfall to it's manually automated. You've got to go in every time and update the tracker, right? And so our recent addition allowed us to simply paste in a wallet address, and then we're going to read the chain data for you. Like, what did you do on chain? We're going to auto populate all your liquidity pools, all of where your positions are at, so that you don't have to do anything. And then when you go
Wow.
claim your fees, the system automatically updates it and keeps all your P&L in line, right? And that's the hardest thing about making good decisions, whether you're looping, you're lending, you're leveraging. You've got to you got to take the time to put the data in somewhere. And so that was our first tool we built. Now we're on our next tool, which is completely automating that whole process where you just put in the wallet address and you just go in and monitor the tool to see where everything's at. You take a quick second and then you go about your day, right? Because good data makes good decisions. And that's the only way to be successful in DeFi. If you think you're making a profit, you may not. You need to know. Go ahead,
Good
Will.
good data makes good decisions. I love that. Whale, please take it away.
No, sorry, I got disconnected and it joined with my microphone. Continue, Steven.
No worries. So yeah, that's what I've got pulled up here. It's a nice little quick, screen of our wallet where we can go into liquidity pools, lending and borrowing. The fixed yield, which I think is one of the coolest things of DeFi. Whale and I are really super excited about it. One of its biggest bonuses is locking in those flare drops for prolonged periods. Most people can't do that. And Whale does a better job of explaining, how the Spectra fixed yield tool helps you lock in those flare drops if you've been using it. Very, very cool. So, I mean, the thing about DeFi is there's opportunities, but you got to make sure you know how to look at them and understand them. So
Gotcha. Okay. So this first question here is for everyone here with us right now here, and I think it'd be a good place to start. And let me know what you guys think, Kobe and Quantic here. I'm wondering if we can just for anyone who's tuning in now, and we've got a decent amount of people hanging out with us. I'd love to just take a moment and just plainly simplify the different types of opportunities that exist in just like a very clear and easy to understand way. So we've already talked about things like flare drops. We've talked about things like liquidity provision, lending, looping. Maybe we can start off with those four and just let people know what they are, essentially. Does anybody feel comfortable taking that question?
I mean, I'll be happy to take it. I missed a couple of questions like lending and loop. I got lending and looping. What was the other one?
Yeah, so just kind of like the main types of strategies that we'll be looking at. The first four that pop to mind are looping, um, looping, liquidity pools, like I guess concentrated liquidity would fall under that, and then flare drops you mentioned as well.
Okay.
Yeah.
So we'll do liquidity pools, and I'm going to bring up a unique tool that Whale's been building, which is the liquidity pool intelligence, right? And
Ooh,
so
yes.
liquidity pools means you put two different tokens in there, right? A stable coin and FXRP, and you are lending your money for people to use it to exchange from A to B, right? Again, there are a lot of factors in there. I don't want to go into them too deeply because there's education, but that's what a
Mhm.
liquidity pool is. And there's high risk. Like you could get into liquidity pool with a bad token and then be left holding garbage. So making sure you're getting into the right pools and why you're getting the pool is super important. But the liquidity pool, that's basically what it is. You're supplying collateral of both assets, allowing people to use them to exchange. When I want to go, hey, I want to take and exchange USDC for FXRP, I click the button and it uses that pool to do it. So people get paid to lend their revenue. Now the difference is you can see this chart. I don't know which charts got pulled up, but Whale's been building this. Is This shows you where the concentration of the liquidity is. And the reason that matters, again, is the tighter the range you make it, the more your liquidity is being used. If you said full range, right, you're only going to use a small for, and you have, let's say, $10,000, right? Or let's say at that $100, right? You'll only use maybe like $10 of your full liquidity because you're on a full range motion. Now there's some real cool stuff with V4 to make it a little more valuable to be safe in that full range. But as of right now with V3 dexes, you know, concentration comes with risk. You know, wide range comes with different risk. You're not going to be as active. You're not going to use as much money, but it's safer. Concentrated is less safe because you're going to you could get transition from one to the other, but you're going to make a lot more money if that's your goal in that pool. So there's way you go about and ways you think it, but that is what concentrated liquidity pools is. I can see right here that people are kind of, I would call it bullish on this pool, is because you can see there's more concentrated liquidity to the upside of this pool than people thinking it's going to be on the downside. So, you know, looking at those liquidity pools will actually give you some idea of what people think is going on in the market as well. It's kind of cool. It lets you see where the money is, because that's what, right? Where the money is the truth. That's the Sousa tort. Like, people can say whatever they want. Money talks. That's it. So that's liquidity pools, the concentrated liquidity pools, and one way to look at how LPs work.
Gotcha. If I can just take a quick moment and just quickly, like briefly summarize that. So when it comes to liquidity pools, you're actually kind of depositing your funds, and you can control kind of the spectrum of price you want to actually cover. The wider the spectrum, like let's say you want to cover, let's say XRP, you can cover it from $0 to, let's say, infinity dollars. It'll be zero risk essentially, but the reward will be significantly lower. If you narrow your range to like from like $1.50 to $5, you're gonna have a lot more returns, but there'll be a little bit more risk involved. And actually, Quantic, this just reminds me that we actually have at Web3 Matters an entire concentrated liquidity masterclass. I think I want to actually pull that out from the archives and make that available for any of our viewers right now if they'd like it. So if you guys do want to have like a fully written out concentrated liquidity masterclass, make sure to comment below. And while you're at it, give this live stream a repost. We'd love to get this information to as many people as possible. We'd love to share the resources that we have available from Flare forward to all of you guys. This stuff is game-changing stuff here, so let's get back into it. Actually, real quick, Steven, before we get back over to you, Kobe, Quantic, I haven't heard your voices in a while. Is there anything you want to make sure that we emphasize? Any other questions about what we've spoken about so far you guys want to ask? Where are you at?
I might have missed it. I got pulled in a different direction a second ago, but yeah, like in terms of like the flare drops, I'd like maybe to let folks in the audience that maybe aren't familiar with, like, if it's the R flare, the reward flare, and maybe like how that works. Are those the same thing? Are they like the flare drops are given in our flare or in our flare? How does that work?
Real quick,
No,
Kobe, that was
those are
that was
different.
masterclass in segues, by the way. Sorry, Steven, back to you.
No, I was answering Kobe's question. Those are two different things. Flare drops were designed to bring long-term stability to the network. So it rewarded users who started with the network and stayed with the network long-term. That was what the flare drop was, right? So, they transitioned from dumping all the money to the XRP holders who 50 or 60% would have dumped it as soon as it came into their hands just to get back in XRP, and said, hey, we want to build an ecosystem around people who want to be in it. So we're going to reward those who stay around for the next X years. And so that's what the flare drops were. Now the R flare rewards, think of it like the goal of being like a self-priming pump, right? So, you've got an ecosystem with no value. Well, how do you get value? You got to reward people to add value. So the goal of the R flare is to reward specific behavior to start priming the ecosystem of the pump. And then once the pump is running, you no longer need the primer, right? And so that's what the R flares are designed. They're designed to, jumpstart ecosystems and tools inside the ecosystem. And there's a substantial amount of those. Those are Hugo said several times that they don't think they'll use all their R flare rewards, and I don't know the specific number. Victor might give us a better answer on that, but there's a ton of R flare rewards that haven't even really been used, and those will start getting used soon.
Okay, cool. So the flare drops were given, like the recipients of that were given just straight up flare. It wasn't a vested token at all, right?
Right.
Okay, gotcha. Okay, and then the second thing is in since we're
So
already talking
just
about.
a quick TLDR, Kobe, just in case people still do not get it. Bottom line here, what has happened is that people that has been contributing and participating in the ecosystem and the network, they have received money, and not a small amount if you do the math.
They're the ones not crying right now. Like if somebody's crying about the price
Exactly.
appreciation, I can guarantee you they weren't one of the OGs. That's
I
just
love
all
it.
there's to it. Because we might be down to where we were 12 months ago, but my bags are sitting fat still. Like it's okay. Because I've been, the rewards, everything else has just been compounding and compounding. It's been incredible.
Well, let's talk about that a little bit for a sec. The tokenomics itself, right? So if I did hear somebody recently say, so it is inflationary token. Um, in the past, that's pretty much been an absolute no go for me. If something's inflationary, I just won't touch it with a 9 foot pole. I feel a little bit different about Flare, but does maybe somebody want to speak on the tokenomics and why it's inflationary?
I mean, I'll do as best I can. Again, this isn't well. This is more Ace and Wales kind of area. They're kind of diving in. But one of the biggest things about the tokenomics is that obviously it's been inflationary because of the flare drops. Like that's one of the biggest pushers of the thing. And so what happens is when the flare drops come in, you're going to see a massive drop off in the inflationary. Now it's not going to go to zero, but and again, this is where trying to understand their whole process and not my area, but it's going to continue to reduce over time. And I know people have kind of put in some different FIPs to try to make it reduce even better. Again, that's definitely not an area I want to say like I'm an expert on at any means, but I do know like those are the goals and the processes that are there.
And just to clarify, we're talking about the Flare token, not the FXRP token. And
Right.
also, when we say reduce, we're talking about reducing the inflationary component of the token, not the price, not the supply, like the inflationary properties. So that's a good thing. We want to see that be reduced. There we go.
Yeah, same difference. And I mean, I think that's a lot of the same reason why people aren't. It's one of the reasons that people aren't as bullish on Ethereum as they once were, right? When the EIP whatever it was, I think like 2 years ago when it went to kind of this. Was it a fixed supply? But now it's this model where it's not necessarily fixed or unfixed, and it's based on network activity. And I think that yeah, tokenomics are important. It's probably one of the reasons why people love Bitcoin, right? Scarcity. That's why you hear Michael Saylor yelling about it. And so yeah, if it was up to me, I would like to see that addressed, and I'm glad to hear that people have been doing governance proposals to talk about that. And I know it's been a discussion on Twitter as well. So, but sorry, I know I kind of hijacked and we started talking about tokenomics and price, and we're a little bit getting out of the DeFi conversation. So Trav, reel us back in, would you?
Happily, happily. The one thing I will comment on that though is that what's cool, what I did not realize actually is the fact that it is inflationary to reward the OG Flare supporters and the OG Flare community. I'm on board with that. I think that's super cool. That really gives incentive for like the early adopters, the early believers to just hang on tight. And the fact that that liquidity went to them, not just like VCs, not just like whales and insiders and all that stuff is pretty cool. I'm definitely into that. So let's rein it in. Let's get into the meat and potatoes, which is our new tagline of let's find some spicy DeFi positions. And I'm taking notes because I mentioned on my own personal X account and here live on this live stream here as well, actually, that I'm going to be taking some of these positions. And we will make sure to be monitoring these over the next couple of weeks, next couple of months to see how they're doing and to really just get like show you guys that Flair's not messing around here. So, Steven, I'd love for you to take us away.
Awesome. So I pulled up the lending page. And so again, we talked about lending and looping. So I'll cover lending first. Now there are several ways to lend yourself money. And so lending means like you put money somewhere and then you take collateral, you take your collateral out against a loan against it. So if you were to do that at a bank, you might get, you lock your money up in a CD, in a safe or what do they call those, CD, right? And then they give you a loan, and they're not going to give you a 1-for-1. They'll give you whatever they feel like based on your credit and then your payment plan, right? Well, DeFi, that's what it's different. Decentralized finance. I can say, hey, I've got my money. I want to take a loan out. This is the risk I want to take. Again, do your own research. This is about understanding your risk tolerance, understanding what you think is good for you, and research and educate yourself is very important. Again, our tool helps you track these items, but those decisions, how heavily you want to risk, are going to be based on your own personal. Again, this is not financial advice how you do it. They're just variables on how you can go about it. So for first, the OG was Kinetic. Kinetic's a great tool. It's a great lending and borrowing tool. And so what you can do is you lend on Kinetic and then you borrow, right? So you can lend SFlare, FXRP, whatever you want, and then you can borrow against its stable coins, other cryptocurrencies and stuff like that. There's some really cool stuff you can do when you're borrowing money. Like if you want to hedge against a deflationary, you could take a loan out. Let's say you had $100 you're going to take a loan out in. You could take 70 of it out in a stable coin, but then $30 out in a volatile crypto token. So this way, if the crypto token goes down, you can actually pay back that debt for less. So it gives you some ability for flexibility. Then if it, if it goes down, it keeps your health factor in check, right? So if you're using SFlare and then you're borrowing a little bit of SFlare and SFlare goes down, you're hedging your risk, your liquidation risk. Again, a different factor entirely, but there are so many nuances, just kind of giving that as an example of a nuance that people need to understand when they're doing lending and borrowing. There are lots of variables, ways to go about it. And that's what makes DeFi so, I won't say beautiful, right? It's flexible. You can do all different types of things to make better decisions and decisions that would allow you to get more money out. So Kinetic, simply, you just lend your money, you borrow your money. And then the big difference about Kinetic is their liquidation point. And I don't want to misspeak, so I don't want to say exactly what it is, but Kinetic has the lowest liquidation point. And what I mean by that is, like, let's say TVL, total loan to value ratio. I can't remember exactly what it is, but CDPs for Gnosis is 90%, and Kinetic, I think, is like 70 or 80 or something. Do some research on it, but it's substantially lower. You can't, the risk, the amount of money you can take out is substantially lower. The sooner you could be at risk is substantially sooner with Kinetic on particular tools, right? But Kinetic has a lot more variety to choose from when you're going to lend and borrow, right? They've got all the tokens you can kind of lend and borrow. So that is Kinetic. It's pros and cons. More variety, a little less flexibility in your amount you can borrow. And then we have, go ahead.
So I was just going to say, although if you decide to lend a stable coin where there's zero price fluctuation, the risk is also going to be very, very low. The reward will also be a little bit lower here, but it's an option. And one thing just to kind of really emphasize how cool this is whenever I'm doing, like, investigating or researching different DeFi positions, I always take a moment and imagine the alternative, which is going to my bank, talking to a monkey in a suit, and being like, let's figure out a place where I can put my money. Kobe's got it, you got it, and I'll only make like 0.5% of interest over the next 200,000 years. Maybe let's take a quick look at some of the actual what those returns look like for lending, if that fits in. If I'm not interrupting your train of thought here, or we can get to that later.
Well, I mean, so it depends on how you do it, right? Mm-hmm. So there was this really cool, like, again, it's all DeFi is about being creative, right? Kinetic actually had to put out a stop because we were talking about looping. What is looping? So Whale showed me a portfolio. One dude it was like $1.2 million lent and like $800,000 borrowed, right? But they were stable coins. So the guy, what he did, like, so looping would be like, you put $100 in, right? You take $60 out so that it's, it's a safe loop. So now you got $60. Well, now you put that $60 back into your collateral, and then you take out $30 from it, right? Now you're up to 90. So you're climbing this ladder by using every ounce, but then you're also reducing and increasing your liquidation factor. And the thing that gets some people, and I saw in Kinetic's Telegram at one time, somebody had gotten liquidated, right? Because they've been doing that and not paying attention. In Kinetic, you have to pay to borrow and supply. To borrow. So when one time when that guy, he had a super high, it was like 1.11 or 1.2, right? Which means at 1.10 on Connect's health factor, you're liquidated. So he had a hairline to get liquidated. Well, the moment he had to pay for borrowing that money, it pushed him over his liquidation, because you don't pay by, just going to like you would to a bank. They take it out of your position or they add it to your position. So if you keep a unhealthy risk factor, just the interest alone could kill your position and allow you to lose all your collateral, everything.
So
So,
So
this is a
if
good
sorry
question.
to interrupt, I just
Go ahead, go ahead.
go.
I just want to ask, what is, from your perspective, Steven, considering healthy and whatnot?
that everybody's got their own risk. I
Yes.
ride, I've been doing this a lot longer, so I'll ride that line a little bit tighter, but doesn't make it smart. Like, and then I have some that I don't ride it tight at all. So we always tell people, like, when you're dealing with kinetic 2.0 or higher, right? And because the big difference is
Wow.
the cool thing about CDPs, which we could talk about when we get down to there, which is they tell you which liquidation price is. Kinetic does not necessarily tell you, but you could have a CDP that on, let's say, FXRP gets liquidated at 90 cents. Well, if in your mind XRP is not going to 90 cents, that's an extremely healthy thing. That's what you're trying to decide on. So everybody's got different, and the variables are, what do you feel good about in the particular protocol?
Totally. And like for me, right? Again, just to even kind of further hammer that point in, yeah, it's just like trading leverage, right? Like everyone, like 10x leverage might be high to somebody, 50x might be high to the next guy. It's all about risk tolerance. For me personally, is like 1.5 and above is kind of my safe zone. Like I just looked at my position on Kinetic is 1.49 right now, and that's to like, all right, if we like my TA says we should be at least go up and side or sideways right now, but if for some reason that dips below, like I have an alert set and I'm not going, I've already kind of done the math and I haven't said to myself, oh, I'm going to wait until my health factor gets to this low. I've already done the math and I figured out, okay, roughly my health factor will be this if price drops to this price. And so I have alerts set. And if that alert goes off, then I start to basically sell some of my position and then repay back the loan. So I have lent Flare out and I'm borrowing USDC, bought more Flare, and then put that back in the position. So I only looped twice, not too crazy, at least compared to what I used to do back in the day. So, but yeah, risk tolerance is different for everybody. I would say, yeah, 1.5 is good for me, but a good rule of thumb, I think I would agree with Steven. 2 is probably a safe recommendation for most folks, especially if they're new.
I love it. And then one quick highlight of advice is that the more risk you're taking on in any sort of trading position in crypto, whether it's lending, borrowing, whether it's liquidity pools, whether it's leverage trading, the more risk, the more you actually have to pay attention. So if you don't like staring at your computer screen for hours every single day, you're going to want to have a safer bet. And then vice versa as well. If you're into it, if you love this stuff and you want to actually sit down at your computer and monitor charts as they go, then you might be more interested in taking on a little bit more risk. But again, no financial advice. Back to it.
All right, so we've covered lending and looping and Kinetic. The next OG that came out was Cyclo Finance. I'm a super fan of this tool. But it works entirely uniquely different, right? So Cyclo Finance has a token, and I'm not going to try to get into it too much. But I always tell people, like, you look at whatever the token's trading at, and that's how much capital you can take out against your asset. So if it's trading at 20 cents, if you put in $1, you're getting 20 cents out. Very simple math, right? There's no liquidation risk. Like, that's the unique thing. So Cyclo, like, if you're asking me, if I go to Cyclo and a token's at 20 cents, I'm probably not going to use it, because in my mind, if I'm going to put $1 away and only get 20 cents collateral back, I need to be wanting to hold that asset for an extraordinarily long time. It just, for me, is not a good fit. But for other people, like, hey, if you want to buy, let's say, staked XRP, and you're just going to buy, put $100 in there, and you're going to take 20 out to go play around in, you don't ever have to worry about liquidation. Cyclo is the way to go. It's a liquidation-free leverage. Now, where that really gets gangster is looping, right?
Hmm.
I actually got a ton of ETH that I didn't have before because used Cyclo's looping position. So when ETH was at, $1,400 and the CY token was at 80 cents or 90 cents, which means like if I put in $1, I got 90 cents out. So what I did is like we talked about looping. I just I took $100 and when it was at 80 cents, 90 cents, 70 cents, I would just loop it all the way down to like $3 or $4. Like I didn't care because I wanted to create the maximum exposure at ETH at those prices because I didn't mind sitting on it long term and I wasn't worried about risk. So I could create a maximum exposure looping with no risk. And so I went from having no ETH to now having 6 ETH, and it really only cost me about $1,200. Right. And
What?
right now, oh, it's even better. Like right now, so ETH, I rode ETH all the way up. So every time it went up, I would sell some of my position, stack it back, and then when ETH came back down, I would just loop it again. So I was Concordian up, but the beautiful thing is we had this massive crash. My last loop, or actually I've got some other loops like 3 or 4 thousand, but I was looping at 5,400. I've got some I think looped at 48. I don't care. It's sitting there. Like I can wait for ETH to recover. I don't have to worry about liquidation. I don't have to worry about anything. And I'm gonna drop a little gold gem, right? So like we're talking about the ETH or the lend amount is based off of the token of CY price. Right now, gold gem for anybody. Cyclo has dropped the FXRP. If you go mint, you're going to get a 1-to-1. So if you have $1,000, you go to borrow, you're going to get 1,000 CYE tokens. So you're going to get a 1-to-1. It's a rare 1-to-1, but getting out of it's a problem. So you need to be willing to sit on it for a little bit as the engine starts and gets to running. We've got SparkDex putting up liquidity pools and stuff going there, but it's an incredible, in my opinion, not financial advice, unique opportunity to lock up some FXRP long term and get 100% of that collateral out right now. Like you got to wait, but you get 100% of the collateral out. It's kind of sweet.
So, and maybe you touched on this, but with no risk of like traditional liquidation, then as the user, what is the risk? It can't be
Um,
completely risk free.
So I mean, the risk obviously is the token goes down to nothing, and you still got to pay back a certain amount. But here's the bonus, right? So CY ETH was at 70 and 80 cents. I knew it was coming down. I mean, the S Flare token trades between CY S Flare trades between 30 and 50 cents. I think it barely gets above 45. So at 80 cents, I locked all these things up, which means in general, to pay it back, I would have to have 80% of the collateral. Well, now the CY token went down 50%. So to pay back my debt, and this is where people could get confusing, I don't have to buy as much CY token because now it's 60% less. So, the $80 will only cost me $40 to unlock. When I do it, it's like I don't know, it's like going to a slot machine. When you unlock it, you get all this money that just falls in your account. It's crazy. It's funny. I've recorded some videos on it.
So to try, so just checking for understanding here. So to try and mitigate some of that risk, it's timing, right?
There's
Okay.
timing. Well, and then
Yeah.
your asset grows. Let's say you're putting,
Yeah.
FXRP there, right, at
Right.
$2. If
I mean,
XRP jumps to 4, then you still got twice the amount of value now in your collateral. Then what do you need to pay it off? So you just got to be happy holding the asset long term is one of the biggest key factors.
yeah, that's one of the things that I wanted to touch upon, Stephen, because I wanted to know from your perspective. Um, okay, let's assume I'm willing to take risk. I'm gonna hold an asset for long term, but then I don't want to deal with all of this stuff that can happen in between. I rather have a vote that can protect me against potential liquidation or something, more risky. Is that possible for people these days that are not, crypto experts or super technical? Not that we have like vibe coding tools and all that.
Yeah, I mean, I would definitely say it is. I would say the best one for that is the newest one, which is the CDPs, in my opinion. Just the way it's set up's better. The thing about Cyclo finances is about timing, right? It's great. Let's say, like I said, if you put in 100 and the token's trading at 30 cents, you're only gonna get $30 back. So you'll get some money back, but not that much. If you went and did the exact same thing on Kinetic, your health factor would be like 2.14, 2.15, right? So in comparison to a 30 cent, it's a super low risk, but you don't get as much value. So both of those plays have the ability to be low risk. Like I was saying, just depending on what you're looking at. And then the CDPs, I think those are the best. I love the CDPs, but I like having more leverage. So that's the difference in what I'm looking for at CDPs. So Cyclo, I would say is a more safe, like I said, risk-free liquidation. Kinetic has a low risk bar, but being able to measure it in more tokens, it's really not too bad. Like I said, as long as you don't overextend yourself, there's so many ways to go about this. It's incredible.
Dang. Okay. So it sounds like this Cyclo finance here. By the way, do you have their X handle? I'd love to check them out here for sure. Is it's
And I
great
can hear
for
you, Whale. I can hear you typing, Whale, or whatever.
Trap. I think that's trap.
I love it. So yeah, no, it seems like it's great for high conviction holds for the long term. So folks,
100%.
yeah, you're not necessarily going to use this resource for a more speculative token that's available on this site. You're gonna do it with a token that you're gonna feel comfortable holding throughout the ups and the downs, and yeah, just pay attention enough to take advantage of those ups and downs as well.
Yeah, I mean they've only
And
got
even
3 tokens.
go
I
ahead.
mean that's the thing. I was just saying, like that's the other thing. Like certain ones have certain tokens. Like Cyclos only has ETH, S Flare, and now FXRP. It's only got 3. So
Okay.
Kinetic has more variety. CDPs only have 2. So I mean it depends on what you have, what you want to leverage as a asset, and then how you want to go about in the risk.
Awesome. Awesome. Okay. So I am super curious that like kind of whenever we're done going through the list of different resources to actually pull up one of these sites and actually take a look and see what it might look like to actually take on one of these positions here. But before we do, I just wanted to make sure, Steven, that we covered everything you wanted to cover on Flare Forward here, or the DeFi
Uh,
Tracker Pro.
yeah. Like I said, it wasn't much we were wanting to cover. Like it was more about seeing the tool, how it helps automate the stuff, and then understanding, how it helps you make better decisions. I think let's look at the Enosis loans. So we were talking about liquidation price earlier. As you can see, I have this picture. It tells me, hey, I'm at a high risk, right? I've got 1900 collateral. I've got 1402. My health factor is 1.41. If you're looking at it from the kinetic standpoint, if we go to
Mhm.
kinetic here, health factor 1.57. You can see the variable difference there. But the cool thing is, I know, like, if I'm going to get liquidated, the only thing that's going to liquidate me is if FXRP drops to 168. Then I'm liquidated, right? Big difference. This allows me to know what dollar amount I'm going to be liquidated at. So that's the coolest thing on understanding the two gap differences there.
Gotcha. And just to kind of, this is something we haven't really clarified yet. What happens when you are liquidated?
Your collateral, like you put up, just like if you went to a bank, you put up collateral, and then you didn't pay on the bank, they take your collateral, so you lose your money. Like that's the risk. You lose everything.
And I don't necessarily know how Cyclo does it, but I know like on Aave, from my experience with Aave, which is kind of I would say the most OG lending and borrowing protocol in all of Web3. Sometimes it'll just be a partial liquidation, just to bring your health factor back up if it's not like a crazy dramatic drop in price. And so again, like I said, I don't know if Kinetic does this, but sometimes you'll get a partial liquidation and sometimes you'll get a full liquidation depending on like volatility and things like that. So always good to just kind of stay above a certain health factor for sure. And pick that health factor. Like for me, like 1.5 is it's breaking out. The price is trying to break out right now, by the way. So I don't think I'll have to decollateralize today. So
We have
So
another.
yeah, yeah, I'm back, guys. I'm back in my computer, so I'm back here. So yeah, you get liquidated enough to get your health factor above 1. So it like you won't get like it's
Okay.
either all or nothing. Like the moment that you get back above 1, I mean, I was trying to set up a liquidator and it's actually way harder than I thought. So like the moment that you go at exactly 1, you get liquidated. But because your LTV is much higher, like for $1, you can only borrow against 70%. So each dollar that gets liquidated on your debt
adds 30% more collateral. So it's not like, I mean, Flare you would need to have like a 99% drop in a second to lose it all. But if it's just dropping, like you would just get like partial liquidation, partial liquidation, partial liquidation. So it's also not the end of the world. And then kind of what I'm exploring is, do I set up like a stop loss where I know, okay, I have this capital, and instead of keep adding more collateral to try to avoid liquidation, at what point do you actually remove collateral and then you set it up like a stop loss? So you were saying, okay, instead of having my LTV at 50, I put it at 65. So I know that if I go 5% down, I start getting liquidated, and that would be like a stop loss where you're selling your capital on another format. What's up, Q?
So I just wanted to interrupt because we have like 10 minutes out, let's say, left, sorry. But we just got a nice retweet from Fleur, which we really appreciate because we have a lot of people that are tuning in and they have been asking about this. So I do have a like full stop in 10 minutes, but if it would be possible, it would be amazing if we can cover at least a little bit of upshift, Firelight, and above all, perhaps Spectra, which is one of these protocols for yield trading that is much more complex to kind of wrap your head around. And, I don't know how you guys are seeing this, but from my perspective, people are trying to figure it out what is kind of like the best strategy. And the best, of course, is always going to depend on your level of risk, but let's assume some sort of benchmark so that people can have an understanding of, okay, I have my FXRP now. Should I try and go and try and stake everything on Firelight and that's it? Should I try and go all in the Spectra, or should I go with the bolts? Personally, for me, I'm very used to playing with balls, so I feel comfortable there. And they have like a lot of information about what is happening with your money there on chain, which I think is amazing. It's a clear point to stand out. But I'm wondering about your perspective here, Whale and Steven.
Yeah, for sure. So, Steve, can we go back to the fixed yield page? Because I think that's the first thing we need to explain, and then go down more, and then choose the Rappler. Okay, great. So now on Scepter, choose that same pool so that we can go back and forth and explain what the information is talking about.
Oh,
You're muted.
there.
Can I swap between two screens? Because I think I only selected the one when I set up.
Yeah, you were on Sceptra before.
Well, I used the same screen. Can you see Sceptra?
No, not right now. Anyways,
No.
so
I go
you have the
back and forth. So.
Yeah, so pick that one.
Which one? Spectra?
Uh-huh. And then open that pool. Fix rates on the left.
Fixed rates. There we are.
All right, so choose the Rappler. Just so we like translate. So, okay. This is the page that you see, which is very complex because basically the purple line, which is the base APY, is the current yield looking backwards. So that spike, that's because the flare drop was added. So that's why in that precise moment, the APY went up. But this is always backwards looking. This is not predicting what's the future. So if you buy now, that is the expected returns. Now the implied is the discount that you're trading the principal token. So the higher the implied, the better the returns, which means that you're getting a better discount on the principal tokens. So how does that translate is that you have a maturity. This one is in May 15, I think, or like in May of this year. So we have a little bit under 4 months left. So if you divide 22% annualized returns by the time to maturity, that's the actual return that you get. So if we go back to the tracker and scroll down, choose Flare again. So right here, what I made is like, okay, we have these numbers. As you can see, the base and the implied is the same that we were looking at the chart. We have the maturity date, which is 127 days. And then what this means is that right now, if you buy the principal token, the return of investment to maturity is 7.25. So the higher the implied, that means that you're getting a higher return divided by the times left. So that's the actual return of investment. So you want to buy principal token when the implied is much higher, and you want to buy the yield token when the implied is lower. Now, principal token, it's a safe move because it's like bonds. It's what Quantic was saying earlier. You're buying a bond where you're like, okay, I'm happy to lock in these returns as long as I wait until maturity. Now, the yield token, it's a speculative move if you're betting that the implied or the yield is going to increase. So, for example, for this very specific token, since we know that the flare drops are finishing next month or this month, in 3 weeks, we know that the base APY is going to drop. So right now, buying the yield token on this particular pool is probably not the best move because we know that the yield is not going to go up. It's actually going to go down. So because we know that the yield is going to go down, if I can lock in a 10% yield today and the yield is going to go down, then it's the same thing as keeping that yield going for the next 4 months.
Wow.
So this is beautiful. I really like it. And a lot of the things that I've been building with this app, it's like, how do I make my decision making easier? And I think that this is great because now you're like, okay, if I buy PTs right now, this is exactly how much I'm locking in. Now, another thing that I haven't really taken into consideration is the size of the trades. Victor was talking about Firelight and bolts and this and that. I think that size is everything, and sizing your trades is very important for two reasons. One, because oftentimes I feel like whales have a harder time because there's not enough liquidity to absorb the trades, and I see it very often where people do big trades and then they move the market completely against them. So that's one reason. And then number two is, unless you're extremely sure about what you're doing, you should never be overexposed where you're feeling emotional about the trade that you just did. So if you want to do Firelight and you don't know what's going to happen, choose a number where you're like, okay, this amount of XRP feels good to have it here. If I'm wrong, can I afford to be wrong? For fixed yield, can I afford to be wrong with this amount? If your answer is yes, then you're doing a calculated risk. If your answer is no, then most likely you're going to lose it, because if the market moves against you, you're going to be completely emotional, and then the first mistake is going to become a second mistake, and then a third mistake, and then a fourth mistake. So answering to Victor, as you scale your knowledge and your confidence, you can scale the size of your trades. But at the beginning, always like test the waters with a quantity that you feel good. And for some people,
Like,
100 tokens are going to be safe. And for some people, 1,000 tokens are going to be safe. And for some people, 10,000 tokens are going to be safe. So it's hard to tell how much is too little or how much is too much. So the recommendation is assess, can I afford to be wrong on this trade? Yeah. Go ahead, Kobe.
oh, I was just gonna say, like, yeah, that's what I've given. I've given recommendations like this to so many people, and um, it's about the person, right? So if you're looking for like these like quick gains and stuff, obviously, if you're like this like meme coin trench kid, like this isn't, testing out a DeFi protocol for $10 for a week to see how it works is not going to be exciting to you. But it's that's why these kind of, I don't want to even call it higher level strategies, but that's why like good DeFi strategies, they're not gate kept. People are gatekeeping themselves, right? So if you're somebody who's sitting on a bag and you haven't gone and played with DeFi with it, and you're waiting for that next for your favorite KOL to call the next 100x, and you're gonna go put everything on that, then maybe those strategies and the gains, the compounded yield that DeFi can bring to your portfolio isn't. Maybe you just don't deserve it. So that's to all the degens out there.
So the one thing that I've noticed, and this is what I'm working on, I wish I was here earlier so Victor could have heard it, but right now the tracker is fetching data for the current stat, like the current what's happening right now. But there's not really a way to go back in history to see what happened yesterday, what happened last month. So right now, what I'm creating is a data layer that it's ingesting every single transaction that a wallet has done and then translating that data. So I could say, hey, go to my S-Flare arbitrage for the month of November 2025 and tell me exactly how much I made. So because you have all the raw data and then you have all the logics to translate that, I could go back and go very specific on saying, okay, this is what happened. This is the result. The next step is to create the proof rails, which is the thing that Victor is working on, where you could create a DeFi ledger, a source of truth, that then could create receipts that can be sent to your auditor, can be sent to the tax, it can be sent to the bank, it can be sent to anybody. So, for example, yesterday or 2 days ago, I saw that Polymarket is going to be feeding data into the Dow Jones. So I was like, okay, so if Flare can verify data, how can I become that source of truth where I can create that same service in a decentralized and verified way where I could be fetching data from Polymarket, verify it on chain, and then create a proof that a Web2 player could ingest in a very easy way. So that's kind of what I'm working on. I think it's going to be amazing, just being able to have a whole history for many reasons. I mean, imagine a big institution that says, okay, I have $100 million, I'm going to put them in DeFi, and I need to give audits and results and like everything to my tax, to my accountant, to my investors. Boom, one click, and you get a report that is like human readable with all that data. So that's what I'm working on right now. I'm almost there. I've been afraid of opening the UI. I've been working on the back end, and I'm always like, okay, so what else can I do on the back end before I face the harsh truth of if the UI works or not? But I think it will well because we already have the logic. What the only thing I'm changing is where the information is coming from. So hopefully next time we connect, I'll be able to show you the guys that.
That is
I
That's
would like,
dope. And then the next step, add a LLM, right? No, I'm just kidding. The whale LLM.
well,
I just want to kind of point out, like, that's the goal of what we're, like I said earlier, good data makes good decisions. And as you see, like with the fixed yield, you know, we have made it so that you can ingest what was ridiculously difficult to understand into understandable actions, right? If I buy the PT right now, what is my ROI? What is it going to be? And, you know, I buy, you know, if it spikes to 12 or 13 cents, I'm getting a text from Whale, hey man, PT just spiked. You know what I'm saying? So, you know, you go take in and lock in a little bit of, you know, PT for long term. And like he said, you're locking in those gains. So you've locked in the flare drop, you know, the flare drop return, even though we're not going to be at the flare drop return anymore. Right. And you've locked it in 4 months from now. So you've locked in all of those drops for the next 4 months, even though they're not happening. It's incredible.
That's so cool, man. Yeah, I mean, the one thing about DeFi that for me personally has been the biggest challenge, but also one of the most rewarding parts about it. It is how complex and how much data is involved with actually navigating through this process of learning how to invest, learning what the risks are, learning what the best rewards are. And so I'm saying that because I am truly grateful for people like yourselves who are making this whole process easier. I remember back in like 2022 when LPs were just really starting to go, or maybe not starting to go, but when I got into it, is the hardest thing was actually learning this stuff because information was scattered and it was crap in some places and decent in other places, but then it wouldn't be complete. And it was such a difficult and challenging time to actually learn this. Now, having everything consolidated into one platform, it's just, I say that, and like it's not even just staking, it's not even just lending, it's not even just borrowing, it's not even just concentrated liquidity. It's all of them together. It massages my brain. It makes me very, very happy here. Also, guys, I had to, yes, Kobe, there you go. You're hitting the right spot here. I want to thank our each and every single one of the 617 people that we have with us right now. What an absolute privilege it is to be a part of this conversation with all of you guys here. I just want to take a quick moment, reset the room here, and then we're going to keep going as long as you guys are able to here. My name is Trav. We've got Kobe here as well. Together we are Web3 Matters. Quantic was with us up until about 6 minutes ago. He had to head out here, but today we have the privilege of hosting Steven and Whale, who's under the Flare Forward account, and they're walking us through all of the incredible DeFi opportunities that currently exist on Flare, and just helping us understand what they are, helping us understand what the risks and the rewards are, and just sharing this information with as many people as we possibly can, because it's some awesome opportunity. Like honestly, some of the best opportunities that I've seen in DeFi since I've started, probably in about 2021. So, yeah, just thank you guys. Really appreciate you guys taking the time. Thank you so much for being here. So, what do we have up on the screen now here? I'm loving this.
All right, so this was a ARB that I did, or just like a strategy that I did last week. So I started with $872 of Flare and FXRP. I entered a liquidity pool, and then I made $75. So that's a 8.68% return of investment in 40 days, around 42 days of in range. So
Wow.
XRP shoot up, Flare went down, right? So that's
Yeah.
impermanent loss. So I picked up the $172 of, I mean, Flare didn't really go that much down. It's just that XRP went up. That's why I got out of range. So I grabbed that Flare, and then there was a 3% arbitrage on S Flare, plus the Flare drop, because I bought it like a week and a few days before the Flare drop. So I got it, and then I unstaked it 2 weeks later. I got the 3% plus a 1.5% from the Flare drop. So this 948 became 991. So that's
Wow.
$43. And then at that point, as you can see here, the implied was spiking at 44%. So that means that I locked in another 14%. So from
Incredible.
$872, I turned it into $1,130. So that was a $258 and a 30%. Now
In how
these
long, Will?
numbers, like a month and a half.
Month and a half.
And then, well, I
Incredible.
will realize this in 3 months.
Mm,
But
gotcha.
still, like, it's insane. So now this is in terms of dollars. This could be worth, like this $1,100 could be worth a little bit less tomorrow, or it could be worth a lot more tomorrow. In this case, what I'm doing is I'm trying to get more crypto. So I'm at a point where maybe my US value is not increasing, but the amount of money that I can put into the market by doing DeFi is much higher that I could by working in real life and then saving some money on the side so I could buy crypto.
Mm.
And I think that that's the other part, that sometimes we only think about the US value, but I mean, if you double your tokens, to make it simple, like if you double your tokens, you need half the pump to be at the same level or to get the same return of investment than you had before. And I'm making it super simple. But it is insane. Like if you can stack up more crypto little by little, and I've said it before, sometimes you do 30% moves, sometimes you do 1% move. But if you can consistently get some points and you're making more than you're losing, and sometimes you're going to lose, like sometimes you make bad decisions, and that's what I was saying about the size of the trades. Sometimes you make a bad trade. Are you okay with making that trade? Will it destroy your capital if you make that bad trade? If the answer is yes, then you should probably pull back quite a bit. So this has just been insane. I think that a lot of people are losing hope and they're distracted when in reality they should be like doubling down, because like in these times when people are not paying attention, that's where the attention gives you the highest return of investment.
Right, I totally agree, and it's not just like Flare specific, right? It's like the total, the market, totally, like the total market. Obviously, there's some people saying that we've been in a bear market, that we are in one, that we're at the beginning of one, right? There's all types of different narratives floating around there, but let's just hypothetically thought experiment. Let's say we are in a bear market, or we've been in a bear market, or whatever. Like Whale said, this is the time to pay attention even more so for two reasons. Well, you can do more, right? If there's less people participating in DeFi pools, the APY or APR is usually higher, right? Because it's like less to, there's more to go around to the participants of the pool. And number two, you aren't distracted by all the different pump. There's a pump here, there's a pump there. And so when we get into kind of the, at least from back in the day, we didn't really have a ton of that this last cycle, but the 2020 cycle, every day you could look and there was something doing 50%, doing 100%. Right now, you just don't have that distraction. So it's a better time. We've talked about, this is the time to build. It's also the time to learn. And so learning is, especially for those in the audience, or for those of us, myself included, who sometimes start like the Rain Man scene where it's like equations coming across my, when Whale's talking, it's like X's and Y's and all the math symbols. This is the time to lock in and kind of figure out what that means to you. How can you do it? And the cool thing with DeFi is you don't have to have $1 million to start. You don't have to have 5,000. Get in there, and when you start to see the gains on your first $10, you'll understand how it works, and then start doing it with some size.
Oh, you're muted there, Steven.
That's the funny thing most people don't realize. Like Whale and I, dude, we laugh about this all the time. When we first connected, he'd move $20 here, $20 there, $10 here, $10 there. That was 14 months ago. And now, we might move $500. We might move $1,000, right? In 12 to 14 months, it's been, exponential growth. That's what the R-Flare rewards done. That's what continuing to compound does, right? And then you're looking at, you've been compounding all this before even a massive growth hits and before the drop off hits. Like DeFi is about the little wins long term. This is a marathon. Even if you get in now, it doesn't make a difference because you're still super early into the Flare just launched their major first product. This isn't their last product. This was their first product. That's the thing people are missing. The very first product that Flare launched was F Assets. That was the goal build of Flare. Like, and they've got a suite of tools they're building. And the cool thing, like we've learned as builders, like, as you're building, you're going, we could do this, and that would be incredibly valuable, and it would create a whole new slew of opportunities. So, not only is Flare built the product they said they would build in a manner that was fantastic, and it's an incredible tool. I mean, look at how quickly it got sold up. Like it was the best launch of XRP ever. And then Staked Firelight, right? It might as well be called second because it hit 25 million in what, a week? I mean, the other protocols some of them still haven't hit 25 million, right? So, this is still super early to an incredible product that's just going to continue to add value. Stuff that, like you said, the smart contract wallets, mind-blowing opportunity. Even my Apex protocol I'm building on the side, it's like crazy. Like, dude, if I connect it to a smart wallet, that means everybody on the XRP could use this protocol without leaving XRP or their wallet. Like, how insane is, like, I've opened up not just my protocol to Flare, but now I've opened it up to everybody on the XRPL. Like, Flare is growing, and if you're on the naysayer, I am sorry. You are really going to hurt later, but it's all about little wins. That's what it's about.
That's super cool here. So, sorry, Kobe, were you just about to jump in there? Go for it.
Just a question, and it might not even really need like a long answer. And like, why is Flare the one to take this kind of the first step, and why were they the first ones to do FXRP? Like, why doesn't Base do BXRP and do the same thing? Why did Flare choose to do that?
You got this. I see you raise your hand. Go ahead, Will. I'll let you have this one.
Yeah,
That's a fun one. You said you volleyballed that up for a spike, bro. That's not very fun. Go ahead.
All yours.
I think that the fact that they have the enshrined oracles allows them to test and witness things, like prove transactions on other chains. So that allows them to create a decentralized bridge. And I don't think any other chain right now has that technology. So like, if you can prove the transaction, or you can trust the transaction and you can trust the execution, then that really creates a decentralized bridge. And I think that was the missing piece on all of these non-EVM chains. So like you guys said before, we now have XRP spot on Hyperliquid. That was not possible before. They were always trading perpetuals before. So now you have a spot XRP on Hyperliquid because FXRP is not only on Flare, it also has the OFT standard, which is the Omni-chain something
It's like
token.
layer 0, right?
Right, the layer 0. So that means that it can move and live in other chains seamlessly. Like you can move it from one chain to another. So, I mean, there's other solutions for bridging XRP, like Base has a MXRP, but basically you do is you deposit on Coinbase and then Coinbase issues that token on the Base network. So it works. It's not the same thing.
So
And
go ahead. I'm sorry.
no, go ahead.
Okay, I was gonna say I akin it to making a hamburger. You know, there's so many people who make different hamburgers different ways. Some have better taste than others. There are other protocols like Whale just said who do it. The thing is the risk, right? Everything we do in DeFi is about risk, right? We're in crypto for decentralized finance to assess risk. And the thing that makes the others so much more different, all of them from Flare, is a risk assessment profile. Flare's risk assessment profile for bridging your XRP to Flare is by far the lowest risk profile you can have.
Wow.
Period. Bar none. Lowest at this point in time, as far as I know, bar none, lowest risk profile. So if you're going to move $100 million, are you going to choose a moderate, medium, or high risk profile? Or are you going to choose the lowest? You're going to choose the lowest. Like you have $100 million. You don't want to lose it, right? But it had to be built a certain way, and that had to be done. It took time. It wasn't easy, obviously, but what is easy if you really want to try to create something unique? And so that's why I think, in my opinion, why it's going to be the best, and it's why it's the most successful launch ever too.
So let me know if this sentence lands. Flare is built to scale.
Now,
For sure.
2.0
I mean,
makes it scalable. That's the big factor I think a lot of people miss. Sorry.
Nice.
so yeah, Steven just said something that it's hard, and there's risk involved in creating something hard. Somebody on my YouTube said, "Oh, this is too hard and risky to get involved," and I'm like, "Sure, tell me one thing in life that is worth it, that is easy and risk-free." There's zero, like literally zero. That could be said about relationships. That could be said about having kids. That could be said about the business. I mean, I was in Acapulco for New Year's Eve with my family, and 2 years ago there was a massive hurricane, and like most of it got fully destroyed. So some people had insurance and they're back up. Some people didn't have insurance and their buildings are completely destroyed. So that's a big business, like real estate, especially in like beach resorts. And sometimes you get a bad hand, and the only thing you can do is like learn how to move forward. So I've been saying it, DeFi is a business. You have capital and you have to learn how to put it to work. And it doesn't mean that it's easy. Like the idea that people want to make a great return with zero risk, it's irrational because, I mean, the fact that crypto before has been very speculative and I mean, 2017, you could throw money at anything and make money. I think those days are gone. And right now you have to take it as something more serious. And like any business has hurdles, any business has challenges, any businesses have risk. This is just another business that has good returns, but it's also risky. And that's how you have to see it.
That makes a ton of sense. You've mentioned that on previous live streams with us as well, is that what really switched for you in terms of actually winning when it comes to all of these DeFi strategies is pivoting your mindset from one of, oh, I want fast gains to now I need to treat this like an actual business. And you mentioned previous examples before of, you needed to buy something, so you just borrowed against one of your positions and you can slowly pay it back later on. Like, the fact that you can actually plan for things like this and prepare for things like this in crypto in a decentralized ecosystem is so cool. Steven, looked like you wanted to jump on the bit there for a second.
Oh man, I did, because I hit something that I think I really want to talk about. I made a post about this the other day, which is all the criers about the price, right? And the new 2.0 wallet, like, oh, the change hurts the price of the token, right? Because originally in the 1.0, right? And I understand, actually building the tracker helped me understand, right? We built a manual tracker and then we said, oh, this is good, but man, automating this would make it so much more scalable, right?
Yes.
And so, 1.0 was a good product, right? And it, as a Flare holder would have been incredible, right? Because what it did was for every XRP that got locked up, it had to have 2.3 times or 2.6 times the collateral value with a lot of stablecoin backing, right? Don't quote me on the number, but that was the key factor, which meant that a lot of Flare was going to get locked up, which would have created a price shock, right? Which would have been great for Flare holders. I get it, right? Price shock, like limited price, drive it up, blah blah blah, right? But what that did come with was restrictions and restraints. So to scale it from 250 to 10 billion would have taken years because you had to get the cash value on the network in conjunction with the FXR or the XRP value. So you were limited by how much USDT zero, USDC you got on the market for scaling. 2.0, which meant Bitcoin was going to be hard to get on board. There was going to be it was going to be restrictive. It was going to be good but restrictive. 2.0 changes that, right? It takes away the collateral requirement, but the biggest bonus for 2.0 is that now you could take a network from 0 to 10 billion overnight. And what that means for the network, long-term scalability, long-term success. The other one was great for short-term vision and great for holders on their price, but it was, the scalability and everything else was going to be problematic. Now you've completely changed it. Oh, your price isn't going to appreciate as fast, but man, the network stability and scalability just changed overnight.
Incredible. That's incredibly exciting here. I just love how crypto continues to prove the world wrong, that it's not here just as a meme coin. It's here to completely change the world of finance in such an incredible way here. So I'm thinking here, guys, because we've been chatting here for about an hour, 20 minutes here. I just want to thank again everyone who's with us right now. We are on the verge, like literally 9 viewers away from crossing 800 live viewers at this moment here. So I just want to thank you guys once again for taking part of this conversation here. And I've got the live chat pulled up. So if anyone does have any questions here, let us know. We will absolutely do our best to get to those. But I'm wondering if we can aim to end off our conversation here by just with some like actionable, practical takeaways. Maybe look at some actual DeFi positions, maybe summarize, maybe even go through DeFi Tracker Pro to like walk through a investor's kind of how they can get started on this, how they can review their different options, and then how they can actually, get started on placing positions. What does either of those kind of seem like a better way to go for you guys?
Yeah, I mean, I feel like once I finish doing what I'm the upgrade, I'll be able to go back and like say, okay, this worked because of this didn't work because of that. Right now, I'm actually don't have any LPs really, so I can't really show anything. But yeah, I think what you were saying, it's just like double in, small, make notes, start learning how it works, and then you're going to start scaling. At some point, it's going to be very obvious. And I think that there are certain strategies that are good for like set and forget, but like everything, like coming back, if you have a girlfriend, you have to pay attention to her. Like you can't just be like, oh, she's my girlfriend, and then I never pay attention to her and she's going to be fine. So I think this setup, like, okay, I can spend 1 hour a day, 1 hour a week, 1 hour every 2 weeks, and then that can set up your risk profile to how active you need to be. So I think that that's an important consideration to have. What you got there, Steve?
Well, I mean, so you're kind of talking about actionable stuff. So I figured I'd bring up kind of, a few things that I'm doing. First of all, I love FXRP and Flare. There's no question about it. So I have no problem holding either. And holding either long term doesn't make a difference. So I have this particular liquidity pool here that I'm in. I'm actually out of range right now. I don't care. Like I'm going to hold off, wait, I'm gonna let the money sit there, let it kind of see if it gets back into range. Because for me, understanding like I don't mind holding both assets. If it's not making any money right now, no big deal. It's still getting, delegation rewards because It's sitting in WFLR, so I'm still earning money on this pool, even though it's completely um, stagnant on that side, on the trade side of it.
Makes
So
sense. So that's the
understanding like
FXRP and wrapped flare or the
that
W
flare
flare.
pool.
Hey, okay, cool, cool.
Yep. And then this pool, if you look at the liquidity pools, this is one of the uh, better performing, 150% APY over, 7 days, 24 APY, the fees that are made, the total value. Again, this matches a lot of stuff we talk about. We want to see, the 24-hour volume to be good. We want to see the TVL to be super high. Those are incredible things. But also, like, understanding how rewards are paid out are super important actually for users to get.
Yeah.
Because if I was going to be actionable, these are kind of the two actionable items I would take. I would go to Enosis Loans with my FXRP. Well, let me do this real quick. So with this pool, you get paid in Apsis and R Flare and your fees, right? And Apsis means like you can take this and then delegate that to the APY cloud, and you're gonna get paid out too. So this pool is earning me trade fees, regular R Flare delegation fees, flare drops when they happen, incentives from the R Flare, plus the Apsis. So
Wow.
it's not just about like Whale was saying, like I'm not just chasing the dollar figure. I
I'm
want
chasing
more
the
Apsis.
APR.
I
Yeah.
want more flare. I want more R Flare, right? And so now when I take those, I can go to the APY cloud and then turn that into compounding, right? But if you're
Unreal.
talking actionable, I would say for most people would be really cool, really easy to action on is where's loans. So you got some FXRP, you can go get a loan, right? And now you take a loan out against it, and then you can just deposit the loan into the earn, right? Which means you're going to deposit it into where is it at? The FXRP stability pool. So if anybody gets liquidated, you get paid. You're going to get a 30% APY, give or take.
Wow.
Again, those APYs are just given, but
Mhm.
I would put some FXRP and CDP, put a little bit. I always like to have cash. So definitely putting a good chunk of cash into the CDP pool, earn pool, and then putting a little bit into the WFLR FXRP pool. Like just that little simple piece there gives a lot of value, as you can see from the different APYs, and you're dealing in two of the best tokens, right? If you're in the FXRP flare pool kind of people, like you're dealing only in the tokens that you really like, plus one of the protocol tokens that is doing really well. So it's like a win-win-win.
Unreal. Okay, I'm excited. I've taken a note of at what time in the conversation we were having this part of the conversation, and I will definitely be going back to this. And who knows? Maybe this is the position I will take. I don't know. No, I'll tell you guys whenever it happens here. But Kobe, what's your reaction to this?
Um, well,
You're incredibly quiet, by the way.
here we go.
Yep,
All
there
right,
you
is that
go.
better? All right.
Much better.
I think it's super important that you covered that because I messed up and I was just looking at APY and I didn't. I thought I was getting flare and APY on my kinetic position, and it's S or R flare, which if I'm not mistaken takes a year to vest.
You get a little bit each time, every month for 12 months. So
Oh, okay.
it's
So
a
it's
divesting process.
That's cool. Okay, so you actually get to get a little bit each month, like while it's vesting. I like that. Can you do anything else with your R flare on flare?
Well, you got to once you claim it, you can do whatever. It's no longer like R flare is just reward flare. Once you've
Hmm.
claimed it, it's flare. Like so,
So it's locked into kinetic. I don't get the R flare and have to go somewhere else to vest it.
you got to go to flare token management to withdraw it, and
Gotcha.
then from there you put it to use work, relend it back to
Okay.
yourself to increase your collateral, pay
S-
back debt, do whatever.
Gotcha. So there's no cool degen extra DeFi stuff I can do with my R flare.
Nope, R flare is flare. That's all it is.
Gotcha.
It's just
Gotcha.
reward flare that divest over time.
Right. Okay. But it's still just still a ERC20. If you didn't go invest it, it just sits in your wallet. If you don't.
Yep.
Okay.
Well, it sits on flare in your wallet on flare. Whale's got it pulled up on the token management.
Oh
Like
yeah.
you
See,
can
I
see
just
it
pulled
in
it
your
up too.
wallet
Okay. Cool.
until you go claim it.
Okay.
That
Gotcha.
This
was really cool.
this is one of the wallets that I have. So here, this is the portal.flare.network. Here you have your Flare balance, which you need for gas. You can wrap, you can delegate, and then you have your emissions. And here you can claim every month from, I already claimed it, so I can get it. So for example, here I have locked funds, 3,700 Flare. I have available to withdraw 336. If I check tomorrow, this is going to be a little bit higher. And then I still get my Flare drops on these funds. And then once I claim this, this becomes Flare. So sometimes what I do when S Flare is depegged, I claim whatever's available and then I arbitrage the S Flare. So it's not the crazy gains, but it's like I'm from this money, like you're starting to stack rewards on rewards on rewards on rewards. And that's what really accelerates the process.
Compounding. It's all about compounding. Eighth wonder of the world.
Okay, you know what? You know what I realized would be super cool as a product on Flare is to have investor kind of portfolios that we could add our funds into. So for someone like you there, Whale, who's like very, very sad, or both you guys, Steve and Whale, for you guys to have like investor funds that we could just put like USDTO into, and then our positions match your positions. You guys do all the work for us. You guys get a piece of the pie, and then we end
It's
up
coming
having.
out. It's coming out, bro. That's already in the works. So SparkDex we did an interview on them 2 weeks ago, and
Yeah.
they're launching that where people can create strategies, right? And then users can just deposit their token into the strategy, and then the people who created the strategies get a slice of all the pie that was made, right? And
It's like
so
copy trading for DeFi, basically.
again, I don't know the full ins and outs. They're still working on it, but like I said, it's exactly what you're saying. Where, and again, we're working with them because we've got our DeFi tracker tools, so we can really track, how we create strategies and stuff.
Yes.
And so they've got a group they're working with. We're talking to them too. But yeah, there's that again beautiful tool that's in the works.
Okay, so you guys heard it here first. There's a very exciting opportunity coming up here. So definitely make sure to pay attention to Flare. Definitely make sure to pay attention to Flare Forward, Steven, and Whale. Big things coming here. Guys, I want to make sure that we don't miss this here. How can people find out more information about Flare Forward?
You can follow us on X at
Okay.
Flare Forward. You can check out our website, flareforward.com. That's we have our branding website. And then we've got our DeFi University .com or DeFiUniversityPro.com website. So those are the three things you can check out. We've got great free 101 videos talking about liquidity pools, mindset, and stuff like that. You can find on either the university page or the Flare Forward page. Gives you great access to some great starter content that we have just to get people going.
And then we have the YouTube where I do like longer form videos. So I'm always making like updates on news. I have an interview in an hour and a half with the head of DeFi on Flare, and we're going to talk about Hyperliquid Move. And I always do tutorials on how to use the apps, and I give information. So like the paid version, like the university that we have, basically has 90% of the information that I have on YouTube, but it's structured like on YouTube, because YouTube is like this happens, so I post it, and then this other thing happens and I post it, but there's not really a structural order or how to approach it from like step 1 to step 2 to step 3. So the idea of the university is that, yeah, you have a system where you can say start here and then go here and then go here, so you can stack up the knowledge. On the DeFi Den, which is like the tier 2 of the university, whenever I see arbitrage opportunities, I give them, like I share them with people. So, I mean, Steven was talking about CDP.
Decision. Point that one out. Yep, the bad decision.
Yeah. Sometimes like you learn from other people's bad decisions. So that's the thing. So for example, CDP that Steven was sharing, people have been dumping. So it's unpegged for 2%. So if you have USDT, you can earn 2% just by swapping from USDT to CDP. So
Okay.
there's so many arbitrage. Like I had debt on CDPs, and now that CDP is depegged, I've been moving my debt from CDPs into Kinetic. So basically what I do is I withdraw my collateral, I deposit it on Kinetic, I borrow USDT, I buy CDP for 2%, and I'm automatically paying 2% of my debt on each trade for free. And then if you add that I'm withdrawing Raffler and then I'm buying S-Flare at a DPEG, so I'm doing an arbitrage on collateral, and then I'm also doing an arbitrage on my debt.
Unreal.
Well, and the other thing he was talking about, learned from a experience he posted in our Den group, like somebody had, a whale moved like $30,000 in CDP at the cost of $700 because he did it all at once instead of breaking it apart into smaller chunks. But again, when you're dealing with $30,000 or $40,000, you're not paying enough attention. It might not seem like a lot, but that's a ridiculous lot of money to spend on a swap. Ridiculous amount.
Absolutely. Man, that's wild. So one theme that's kind of recurring in my brain as this conversation goes by is how important it is to be informed. I just really want to emphasize this. I've mentioned this once already, this live stream here, but I just want to thank you guys again for not only putting yourselves out there and sharing this education with communities here, but also creating DeFi Tracker Pro, which completely allows that idea of being informed to happen in a very, real and tangible way here. So, yeah, looks like Kobe's in the middle of something here right now here, but maybe I'll check in with you guys here. But I'm probably gonna be wrapping up here pretty soon. Is there anything that you guys really wanted to hit on before we did wrap up today?
I do have something I would say. So we covered a lot of in-depth stuff. So a lot of stuff like Kobe had said would look like, the scene where the guy's looking at all the mathematical. Decentralized finance can be basic. Decentralized finance is lending and borrowing. If you lend money and you borrow money, you are now in decentralized finance. Plain and simple, that's exactly it. And then, just don't be afraid. Just deal with small amounts, low risk, and just play with it one step at a time. All this other stuff we're talking about, arbitraging, doing this, doing that, that is something you could get into, but not if you don't want to. Like, the beauty of the centralized finance, you get out of it what you put into it. You can simply, stack in a FXRP, the CDP piece like we were talking about, and have a good chunk of money just building over time, right? Low risk, right? Where you borrowed against your FXRP and then you loan the stable coin into the pool, earning a nice chunk of money. Low risk, easy to do, and then you could just let that ride, right? And just continue to roll that ball down the road and never look at crypto charts again. Like, it's like investing in different stocks or portfolios or anything else. You've got to, you do the research to understand the risk tolerance and then go, here's where I want to be. I want to be in a mutual fund. I want to be in the most basic thing possible, but at least the most basic thing possible is going to earn more than sitting in a CD at a bank. I mean, that's all there's to it. The most basic thing is going to blow away anything you can do in a bank, period. The best thing, like most basic, is going to be great.
That is huge. And I'm really happy that that point was brought up once again here, is that the absolute best you could possibly do in a bank is maybe 3 to 4%, whereas
that's like the baseline for a lot of stuff.
Yeah, which is incredible. That's really cool. I'm really happy that that you emphasized that there, Steven, and I'm super grateful here. Actually, maybe one question that just popped up to mind here, just coming from the perspective of someone who may be watching right now who has zero exposure to Flare. How can they get their liquidity onto Flare?
Tons of ways. I mean, you can use a centralized exchange, right? Any centralized exchange will do it. Not any, but most centralized exchanges will be a great place to do it. If you're not like, one of the great things, I want to give a shout out to Oxenflow Wallet, and maybe that's the guy you bring on sometime at some point. But Oxenflow Wallet, I call it the grandma wallet, which means acts like an app, just like a banking app. You log in with your email, super incredibly simple without the complexities of crypto and keys and stuff. And you can on ramp through his wallet directly into Flare and put it into Kinetic to lend, or put it into staked XRP. But he keeps it super basic where you're DeFiing very simply. So those are the different places I would say you can get onto Flare. Well, did you have anyone I might have missed there?
Well, I'm not sure if you're aware. You are on mute if you're trying to talk.
I got on I use Stargate Bridge. That's what I use.
Stargate.
Yeah, Stargate. Stargate, which is the layer 0. Stargate and layer 0, they just merged. So yeah, you can move back and forth super easy.
I'm pretty sure Stargate's actually on the Google Play, so you can download it on your phone here as well.
Oh, they have an application, like a mobile app?
I think so.
I mean, I just log in from my Ravi or Bifrost,
Same.
like from my wallet. You connect your wallet via Wallet Connect,
Mhm.
and then it's super easy and it's usually pretty cheap.
Perfect. So if I were to have some like USDT on like Arbitrum, for example, I could just bridge it using Stargate, and yeah, we're good to go.
Use USDT Zero. It's much faster and
Okay,
cheaper.
perfect.
Yeah. So, I mean, a lot of the on-ramps and off-ramps have to go through another chain. So, for example, for me to off-ramp, I have to send USDT Zero from Flare to Polygon, and that Polygon I can deposit it into my centralized exchange so that I can send funds to my bank.
Gotcha.
So, for a lot of people using USDC Base or Arbitrum or USDT would be the easiest way to go in and out to Flare.
Perfect. Excellent. No, appreciate that bit of alpha here. Excellent. Sorry, I was gonna ask if you want to jump in here for any final words here, Kobe, but I believe you are stepped away from your office. Of course, Kobe is at his Web2 job right now, just keeping it down, keeping a roof over his and his family's head here. So shout out to you there, Kobe. Yeah, gentlemen. Let me actually I'll redirect that question to you there, Whale. Any kind of burning thoughts or any kind of final things you wanted to make sure that we actually hit during this live stream before we wrap it up?
I think there's two ways to go about this. You can either decide to let market conditions be your success or failure criteria, or you can decide to take, be the captain of your ship, even if it sounds cliche. And there's ways to win in every market condition, and it's up about the mentality and the mindset. And I think that that's the most important thing. It's like, how do I win at anything in life? Is not only DeFi. Like, things don't always go your way, and there's people that can't go past those hurdles and be successful, and there's people that at the first sign of friction they just give up. So keep learning, keep stacking up your knowledge. I mean, for me, DeFi is not only about like making money in crypto and making this my lifestyle and my business, but it's also understanding how so many things work about like psychology. Like so many times, I was looking at a chart where like comparing investment on real estate in New York in the 80s and stock market, and some has overperformed and some has underperformed, but 40 years later, it's more or less the same. And the problem with crypto is that it's so liquid. Like in New York, you bought in the 80s and then it crashed. You can't sell it. So you have to sit in your hands. And then next time you check, the prices are up again. With stocks, if there's a crash on Saturday, you can't sell it. So you sit on your hands. But with crypto, you can make so many bad decisions because you're being emotional about what's happening. So I think that wealth is not only having more money, but it's like the holistic aspect of it. And I think that for you to be successful on anything in life, you really need to step up your game in many aspects of life. It's not just the money game or just the psychology game. It has to be everything. So keep learning, keep growing. I feel like the more I understand this, the more that I can see how the dots connect. And it's just been an insane journey. I'm learning how to market make. Like I've been learning how to do markets. I have this dream at some point to create like a local currency where I am. So it would be insane if at some point I could like fund it because I have the funds to do it, but also create the market and also create the product. Like that would be an insane dream that I'm like, okay, I'm gonna launch a market in my community where I could create like an incentive system where people have the incentive to be in this local currency. And I can also be the market maker and the architect of all of this. I think that would be insane at some point.
Man, what a dream that is. So I have two quick responses to that, and then Stephen, I see your hands up here, so we'll get back to you in a second. So the first things first is that, oh goodness gracious, wait a second, hold up. Nope, it's gone. Stephen, it's all yours.
Heard. All right. Well, I mean, the one thing I wanted to leave with on that is if you're chasing price, I mean, DeFi is not for you, right? It's decentralized finance. It's about understanding the products. Are they building? Are they growing? Their price appreciation is the last thing you'll see happen. So if you're betting on price, then you're not in DeFi, right? You're not in DeFi. That's all there's to it. If you're looking at just the price appreciation, all your whinings about price appreciation, you're way off what you're looking at. You aren't even in the same world
You're
as
gambling. You're
yeah.
gambling.
You're a
If you're
gambler. You're
just
playing at the casino. That's 100% accurate.
Very
Thank
well
you.
said.
Very good. Thank you. But yeah, that's what I would leave with. Like I hear all the naysayers, price, oh your price, dude. Look at the growth. Look at the build. Look at where it's going. Like if they were not talking to you and it was dropping off like a rock and different things were closing up shop, that would open up some eyes for you of like, man, they're lending and borrowing is losing 30% of the value. The stable coins are leaving the network. But you know, if you're looking at DeFi, if you're gonna gamble, stop talking. Don't worry about Flare. Go find something else to gamble on. All right, go gamble on something else. This is not the one you want to gamble on because again, we have an inflationary thing that's got to take place. We're to be honest, some of us think that there's going to be a little bit of a dip down after the R flare stop dropping. We're going to have some panic sell-offs. Like, oh, it's not going to just shoot up. Like, it's there are things that us long-term people completely understand, and the DeFi people. And price is not something we chase.
Yeah.
I think in crypto, there's two kinds of people. The people that are hoping for other people to make their investment more valuable, and the people that are making sure that their investment is valuable. And it's up to us to decide where we want to be. So for me, definitely becoming a builder has changed my whole perspective and relationship with crypto because like the delays, now I understand them so much better. When I never
Yes.
built something, I was like, yo, what the fuck? Why didn't you just like publish what the day that you were said that you're going to do? Like, I never understood that. Now I understand it completely different. And my relationship with my investment is like, if I understand what I can do because of this technology, today's price does not mean anything in the grand scheme of things.
Yeah.
And for me, it's not about like, oh, I hope that Hugo makes my investment more valuable. It's like, how can I participate side by side with Hugo and all the builders on Flare to make sure that my investment is the winner? Because if like the only way that the technology is going to succeed if it's things that get built on that. And same thing, you can wait for somebody else to build it, or you can participate. And there's many ways to participate. And sometimes just using the network is a way to participate. Like, I don't know, for me, there's two people that I like. The people that are just like buying and not doing absolutely nothing. I think there was a failure for like a case for failure for Bitcoin, where it means that all the Bitcoin is stored in a cold storage. Like it could be worth millions, but if nobody's trading it, then it would be a failure.
Mm.
And then the people that are just like speculating and extracting value, like those two people, I really like. I don't know. They make me sick because I'm like they're adding absolutely nothing to this game, and it has been a system that has allowed for that predatory behavior for a long time. And I really hope that that changes soon, and the people that are actually creating value are the ones that win.
Love that. Love that. So much to take away from there. Hope you're on mute there again, Steven.
Man, I gotta say, like he hit the nail on the head. Really cool. Like if you're waiting on Hugo or the Flare team to raise your bags, again, you're in the wrong part of this game, right? You need to be grading the builders. What are the builders doing? What are they saying about it? How do they feel about it? That tells you more than what anything Flare is doing. It's a decentralized network, right? Anybody can build on it. What are they building? Who's building? Those are the things you got to look at when you're looking at Flare, not price. I hate talk like Flare like degens like us or long-term Flare people. We hate when people talk about price, and that's the reason because we're looking at what's going on the network. We're not worried about what the price is. Like price comes, and that's the beauty of it.
No, one thing that I'm kind of sitting on right now is that I'm really attracted to the culture around Flare here. When you compare it to other layer twos, when you compare it to other blockchains here, what I appreciate is you are forced to go back to the fundamentals from an investment standpoint, and then from a just a there's a word I'm looking for, but it's gone here. But anyways, we'll keep it to from an investment standpoint here. Like really, we're at a point in this ecosystem where, like you said, price doesn't really matter for multiple reasons. But the biggest one that I'm seeing here is that there are strategies to win in DeFi, whether the price goes up or down, depending on how you leverage yourself, depending on how you position yourself. So at the very basic like principle of price doesn't matter, it really doesn't. Like you can win no matter what. And then in the other context, price doesn't matter because you're here for the long term. If the ecosystem is full of people who are motivated to keep building in an incredible way, in a way that is meant to scale, like I see no downside in the very very long term here. So yeah, guys, this has been awesome. Kobe, you are back. So I want to send the mic over to you here real quick before we wrap it up and before you get pulled in another direction here. So yeah, talk to me, man. What are your thoughts?
Well, I was stoked that we had this show. Like I said, we've had chats with these guys a few times, but not this kind of chat, right?
Yeah.
Not like going this deep into like the DeFi side, and I'm glad we were able to. Maybe next time we'll maybe do some actual positions, kind of like I know Trav, you had originally maybe planned on that. Um, I'm participating in Flare DeFi, but like I said, make sure you study what the reward token is. What are the mechanisms behind the
Yes.
reward token? Don't just see. And this is an old rule too, right? Like, don't just see big APY and then ape. See where's it coming from? Like, how is that APY being generated? What do you do with that APY or the reward token? Well, like, once I was already in the pool, I'm like, oh, I should probably go learn about our flare. Uh, don't do that. Learn from that mistake. I have the arrows in my back. These guys have even more arrows in their back from learning. So listen, not listen, but learn from the folks that already have arrows in their back.
I love it. I love it. Guys, we are literally on the cusp of breaking 1,000 viewers right now, which is wild. We are at 986 people who are hanging out with us right now. Yeah, thank you guys for being a part of this conversation. I'm really excited to bring you guys back on and run this back here. And what's interesting, Kobe, is you mentioned that, I was hoping to get on to some DeFi positions here. I definitely, where I'm sitting right now, I feel like that's definitely not the best move. What I'm feeling at the moment is that I think the best way for me to move forward, and I would strongly recommend most people to move forward, is not just try, is to actually spend the time to learn, spend the time to practice, spend the time to kind of get your hands dirty and not just kind of ape all into one position and hope for the best. Like start with $10 here, $10 there. Actually kind of get that exposure. You will learn so much faster that way than any other way in my own experience working in DeFi here. And that's what I'm going to do. I'm going to watch some videos from you guys' Flare Forward account here, youtube.com/@FlareForward here. I'm going to definitely have more conversations with you guys. I'm going to research on your DeFi University, and I'm going to scope out these resources like very, very closely and do my own due diligence because it sounds like from this long-term perspective that we are all gathering here and we are realizing is so incredible and so opportunitous. There's so much opportunity there. Anyway, something along
Yeah,
those lines here.
yeah,
It's
good
the
enough
way
for
to
the
go.
girls' side.
So do
I
the research now, get paid later. Invest now, get paid later in exponential returns.
first you learn, then you earn. Like I love that saying. And
Yes.
I'm part of like a couple private communities that I show up every week and I do different like DeFi topics. And then we also have the same on the DeFi University. And one thing that I see very often is how many people they watch every single video online, but they never like execute.
Mm,
And I think that like there's no way around bad decisions.
yep.
Like literally, there's no way around bad decisions because those bad decisions create experience, and the experience is what creates good decisions. So, what you just said, Trav, I think that's the like if one thing you can take away one thing from this stream is learn and try. Learn and try. That's one thing that I've been saying about Flare, and I don't think anybody else has been like really pointing it out. It's cheap to learn on Flare because you can do $1, $5, $10, whatever amount, and you could with $10 you could participate on every single protocol on Flare and
Wow.
get some on-hands experience. And I mean, if you can't afford $10 to learn this, I don't know if you're not willing to risk $10 to learn this, I don't know if you're willing to
That's a
make
Starbucks
the
coffee.
returns. It's a couple Starbucks coffee, exactly.
No,
So
that's one Starbucks coffee, bro.
Depends when you are. But yeah, so just watch a video, create a wallet that is not your main wallet. Like that's one thing it's important. Never test things out with your main wallet. I mean, yesterday I tried going into Hyperliquid, like I wanted to see the bridging process, and getting in there was super easy, but getting it out was a nightmare because I needed to have hype, and then I had like $7 like USD, but then the minimum order was $10, so I added $3 more, but then the minimum deposit was $5, and then I had to figure out where to put the hype so I could pay gas to bridge back my FXRP back. So I do that on a wallet that I have with very little funds. If I mess up, I'm not worried about my loss being compromised. So create a wallet on your browser, deposit $10, test things out, and then scale as you feel more comfortable doing things.
Perfect. I pulled up the Web3 Matters X account here because, guys, we've officially broke 1,000. We're on my account, anyways, and I've
Where's the music?
Oh, hold up. We can arrange.
Yo,
that.
big shout out to Flair for sharing the space. I appreciate you guys sharing that. If anybody's still watching.
Yeah,
Big
Flair
love.
has been super supportive, and we really appreciate them. It's been a great relationship, like working relationship. They have supported us in our like creative projects and also in our building projects, and yeah.
We've
So
been on a journey
shout
with
out
them.
to.
Yeah, we've been on a journey with them. I would like to add in on there while you're looking that up is the one thing like nobody can do is nobody can really tell you what to go into. I just showed you one of my liquidity pools where I was out of range with 3,000 close to $3,000 all the way converted to WFLR, right? For me that was acceptable, right? But if I told you to copy and paste that strategy and you were, like I had a friend who asked me and I said this is what I'm doing, right? And then he got into the pool and then he's like, man, the I'm losing XRP. Like, bro, if you're stressing out about it, you've gone about this the wrong way, right? If you are stressing, you've over leveraged or overexposed yourself to that pool, and you need to rebalance and get yourself out. You can't just, it's not a copy and paste. You can't just because I'm doing it doesn't mean you can do it because I've got finances elsewhere where this is hedged this way. This is a part of an ecosystem. So there's no copy and paste that somebody like most people like there are some vaults and things you can do, but you really can't just go to somebody and say, hey, how should I do my money? Because again, what they're doing has different risk factors. They've been doing it differently, and this is not their only item they're doing. So that's a big thing to think. There's no copy and paste. You've got to learn these are the things that are important. How are your APYs, what the style of pool is. There's rules to getting into that stuff, and that's what we try to teach people. You'll never hear us say go do this because it's like I don't do everything Whale does. I can promise you Whale doesn't do everything I do, and we talk daily like we do. Like there's so many ways to go about this. It's all about you, and you can't do it till you get your hands dirty and learn the basics. Again, don't get too crazy with it. The basic DeFi is lending and borrowing. That's it. You're DeFiing when you lending. When you've lent, you're DeFiing.
I love it. When you lend, you're DeFiing. So if you guys want to get started on DeFiing, check out Flare Forward. Check out Flare as well. Check out Web3 Matters. We are happy to share all the information we possibly can with you guys. I'm going to just make sure that I reiterate this one more time. I will absolutely be taking my concentrated liquidity masterclass and making that available for people here once again, because that was a lot of fun. And that'll at least give you guys an understanding of what impermanent loss is, how to actually determine what your risk profile is, how to actually choose a range here as well. And kind of get you started here as well. But honestly, the best decision you guys can make is for sure check out Flare Forward. It's going to be all information that's up to date and very, very specific to Flare here. And I just think you guys can't go wrong. So any closing words, guys, here? We are just coming up to 2 hours here. Once again, we are at over 1,000 viewers, or 1,030 viewers here right now.
Where's the music?
I start talking so you can get the music prepped. What happened?
Wait. Did you guys not hear the Halo song that was playing?
Nope.
Ah, well, that's a missed opportunity. Let's see here. We got this at least.
We're gonna lose 31 the viewers, man.
There you go.
Hey.
We're celebrating over here. All right, you guys continue talking. I don't think I have minimal bandwidth between my voice and the music. So Kobe, what are your thoughts?
It's so loud. It's way too loud. Hey, there we go. Yeah, my thoughts are, FAFO, man. Go play around, man. F around and find out.
Well,
That's
hopefully you and I will do something live stream here in the next week or so.
yeah.
Like
actually-
drop head on this 1,000 people. That could be a fun
Yeah,
time.
absolutely. So yeah, Steven's got a side project that he's working on, and we were going to go live. I'm gonna help him out with some of the UI stuff, and I don't know, maybe make it cooler, right? And so we're gonna do that actually live in front of everybody. And so stay tuned for an announcement from the Web3 Matters page, from their page, from mine, and we'll lock in together. So.
Heck yes. I love it. I love it. Okay. Whale, Steven, any final words you guys want to share with us? I know I've probably asked you guys this 100,000 times too. Steven, peace. I love it. Thank you so much. Whale, anything?
Happy weekend.
Happy weekend. There it is. Excellent. To our 1,040 viewers, thank you guys so much for being here with us today. My name is Trav. We've got Kobe. We are Web3 Matters. Quantic Senses Love here as well. And we've had the pleasure today of hosting the Flare Forward team. We've got Steven and we've got Whale. If you guys want to get started on your DeFi journey in Flare, definitely check out @Flare Forward here on X. And you have all the links there to YouTube, DeFi University, DeFi Tracker Pro. Definitely check out Flare on X here as well, and they'll get you started and they'll direct you to all different resources here as well. And make sure to give Web3 Matters a follow here as well. Guys, it's been insane. What a fantastic stream. Definitely make sure to check us out next week. We're going to be diving back into vibe coding, and we've got some prompt streams coming up here and there as well for DeFi, for vibe coding, for DeFi Tracker Pro. It's going to be sweet. Appreciate every single one of you guys. Have a wonderful weekend. Take care.
Peace.
Bye-bye now.